Good morning. Welcome to CurrencyChange Daily Markets Update on Monday, the 18th of November 2013. My name is Laurent Guilbaud, Managing Director at CurrencyChange.com, your low-cost solution to send your money abroad. In the US, the US dollar came under a little pressure towards the end of last week, after Yellen's testimony revealed she maintained a dovish stance, as well as some weak US numbers on Friday. There is a risk that the US dollar will suffer more selling interest on policy deadlines in December, January, February, ahead of midterm elections in November 2014. There will be a number of releases for the US this week. So the FOMC minutes on Wednesday are the key one. It may show most interest, but are relatively dated and are unlikely to deliver much surprise compared to the Yellen testimony. And Bernanke is due to speak this Wednesday morning, also something to monitor. In Europe, the Eurozone is looking healthier than it has in some time. The long-suffering economy pulled out of recession earlier this year, unemployment is leveling off, and crisis worries continued to head along with government borrowing costs. Just a week after the ECB surprised the market participants with a 25 basis point rate cut, the euro had already shaken off, and in fundamental numbers, and instead found itself as a top performer in the market for last week. Falling fuel and telecom prices pulled Eurozone inflation down to its lowest level in October, which explained the cut from the ECB. But there remain risks the ECB could announce further measures with another LTRO, long-term refinancing, for instance. The 135 area will be a very good resistance level on the euro-dollar, something to monitor. November flash PMI will be the main release for this week. A marginal improvement is expected after the sentiment of this leading indicator fell slightly in October. In the UK, the pound was little changed versus the dollar and euro after an industry report this morning from Rightmove showed UK house prices decline in November, something new. The UK currency reached a 3-week high against the dollar before the Bank of England publishes minutes of its November meeting this week, after signaling on last November 13 that interest rate may increase sooner rather than later than previously forecast, depending on how employment will perform. London housing prices of real estate fell in November after a 10% jump last month as government measures to boost demand failed to offset the seasonal pre-Christmas usual decline every year. But with the quarterly inflation report last week largely detailing the bank's current stance, these minutes we're going to see on Wednesday are likely to attract less interest rates than usual. They should deliver a similar message than we have in the inflation report in terms of Bank of England projection for GDP, inflation and unemployment. In Asia, something important on the Australian dollar, the RBA minutes first on Tuesday, followed by the government Stevens speech on the Australian dollar, 30 years of floating this Thursday. Both the Royal Bank of Australia minutes and Stevens' speech are likely to reiterate high concern around the highly overvalued Australian dollar. The governor is expected to go on to argue that in the current circumstances, a lower exchange rate for the Australian dollar will help the economy deal with the end of the boom in mining investments that they currently observe. In terms of exchange rate, we can provide you this morning. Sterling dollar, 161.41, up 0.5% since Friday. Sterling euro, 119.55, up 0.2%. Sterling CAD, 162.40, stable. Sterling Australian dollar and Sterling New Zealand dollar are minus 0.7%. Economic agenda UK time. We'll have at 10 o'clock the euro trade balance, expected at 14.3 billion, and at 3 o'clock the housing market index NHB expected at 56. So no big numbers today. If you require further information, please visit now CurrencyChange.com. You can open an account for free with us with no obligation to exchange. You can also contact us on +44 0273 73 2686. Have a great week.